Hi traders, welcome back to another trade recap. So in this video, I'll talk about one of the position that I took yesterday. I've been planning this position for I think few days ago or a week ago, and did not expect this to actually run so smoothly. Closed the position for about 11.17 R for about $28,000 profit. So let's straight jump into the chart, and as you can see, that's the position. But let's just remove everything and let's go to the daily time frame. So on the daily time frame, as you can see, price is clearly in a very strong uptrend, right? I can't deny this. Price is above the 20 period moving average, the blue line here, 50, that's the red line is the 50 period moving average. Price is clearly above all of that. But how do I know price is going to reverse hard at 1959? That's based on the weekly time frame. For people who have not done their research, they're going to say there's a strong uptrend, they're looking to buy the highs, and guess what? They're going to get eaten. I was paying attention to this multi-year resistance since 2021, 2020. Of course, in 2022 April, we actually come back to the area as well. And I give this zone a general, just a rough zone between 1955 to 1965. So this position, I actually share it with my private community members at Neo Trading. So if you're interested about my private community, go to Telegram, click the link in the description. You can actually see how do I take all this position from beginning to the end. So I've said that 1955 to 1965 is a area, is a general zone to actually go short, and I've been waiting for price to come back. And one thing all of you have to know is I did not expect this position to start playing out yesterday. I was actually expecting this position to start playing out maybe next week, but FOMC did the job, thanks to our boss FOMC, who actually sent price all the way up. When I saw that price spike all the way up after the FOMC release, I just love the fact that I think we're ready to go down. So that's the zone there. But how do I know exactly when to enter? That's based on the 5-minute time frame. So if you drop down to the 5-minute time frame, we really have a lot of zones here, and price action are looking very choppy. Midnight, right after FOMC, price pumped up. So this is what I call a very typical reversal pattern. Same thing here. How do I know it's an exhaustion pattern? How do I know it's a failure? We have multiple failures here. Price broke new high at 1953, come all the way back, deep retracement back to 1951, attempting to break through that 1955, again failed, come all the way down. Now we have a final attempt to break through the 1956, again pumped up, come all the way down, and that is what I call an entry signal. That double top, and with price failing to go back to this level, knew that price is going to reverse that. So again, you can actually draw this, that's an ascending channel there. There's a big failure. Price trying to break through, again, that's another failure pattern there. Okay, if you drop down to lower time frame, you can actually see some of these lower time frame reversal pattern. Had a double top, broke under the structure, price showing signs of a market structure shift, okay, where sellers are actually trying to step in, take control, and that's what I like to see. Lots of confirmation on this one. So I decided to take my position. Actually, why do I decide to take my position at 1958? I actually took my position right here after I saw that double top. Just love that when I saw that strong sell-off candle on the 2-minute time frame with some minor pullback, I took a short about 30 pips. On TradingView it shows 300, is really just 30 pips. Stop loss above the high, and we're expecting this to run all the way down. So in between, we actually have multiple zones here. If I were to remove all of this, remove. Okay, so management wise, this is how I manage the position. Let's go through everything together. So the first area that I'm concerned is obviously right here, and price seems to be respecting this area very nicely. So when I saw that strong sell-off at the 1956, knew that price is going to continue. Second area that I'm concerned of is definitely this prior low, right? So as price continues to run down, I actually sort of expected some sort of a rollover here as well. Lots of people will see this and say that's a bullish continuation pattern, but from my perspective, I think all of this buying pressure, all of this bullish move were merely just sellers trying to digest what has happened on the FOMC. So if you think in terms of a logical perspective, when price did such a crazy move towards the upside based on FOMC, how much sellers are actually required, or how much sell side liquidity are required to actually digest the trend, digest that strong uptrend, and to reverse this all the way down? The answer is bloody a lot. It requires you a lot of effort for sellers to actually conquer the market and to step in and take control. That's why whatever price does here, I've told my members and I told myself as well, I don't really try not to get bothered about what's happening in between, because if you're looking at the lower time frame, especially if you're looking on the 5-minute chart like this, you're going to get distracted. You're going to cut off your position earlier, and that's how one of my members actually did. He cut off the position early just to see market plummet all the way down. So let's straight go to the 15-minute time frame. I think it's a little bit too long if we're talking about the 5-minute chart. Nice sell-off there, nice congestion, nice rollover, everything according to our plan since a week ago, since a few days ago, and since yesterday. Everything follow our plan so nicely. Okay, I talked about this trade, just ticks off. Okay, when I saw that strong sell-off, beautiful. So what I need more is price to break through this 1948, because this is a major level of support. Okay, recent high resistance now to support are usually very significant. So what I need, the final confirmation, is price to break under this 1948, confirming a longer term sell-off. And what I want to see is price actually hold under this 1951 area, because if it pops back above the 1951, can you imagine? That would be a very bullish scenario. It means price actually reacts at that 1948 and we reverse back up. But as long as price hold under this 1951, that confirms a further bearish continuation pattern. So what are some of the areas that I also pay attention to? Is possibly this 1934, 1933, and obviously this 1920 low. So held the position and it technically just melted all the way down. So not much to talk about what's happening right here before it hits my target. So overall close for 11.17R, and I've said that for about 27,000. Before this trade, I actually took 1 to 2 small losses here, because I was trying to have a feeling on the market and to actually try to cherry pick the perfect the perfect turning point. And I'm grateful and blessed that this position played out so well. Did not expect price to actually just melt into my target within such a quick time period. It's a very, very quick position, because my target was actually hit so nicely because of this 250-minute candle. Can you see that? So just a quick proof. As usual, after breaking down everything, I like to show you the proof. As you all can see from the PNL, I actually took a $3,000 loss, another 3.2k loss. Both are small positions because I was trying to test out the trade. I had a break even in between for $120 profit, and the final trade gave me about $33,510. So again, there's a live account, and and I hope all of you learned something new from this trade recap. And if you like this series, if you like the video, I'll do more on them, because I do take some of the very nice trades from time to time. So that's it for the video. If you like the video, please don't forget to like, share and subscribe. Hope you learned something new, and I'll see you in the next video. Take care and bye bye.